Hello, I'm Craig Birch here at Manders Real Estate headquarters on the Compton Road in the heart of Wolverhampton with this week's top tips. Remortgaging is very much the theme of this week. As we mentioned in this week's property bulletin, remortgaging is on the up with the rise in base rates, interest base rates with the Bank of England just starting to take hold now. They're going up from 0.25% to 0.5%. People, those who can, are looking to remortgage or at least considering remortgaging, but it's not open to everybody. It's not open to all homeowners. Remortgaging, you will need a certain amount of equity in your home, and you will also, if you such things that happen, you miss repayments or something like that, that can also work against you. Not everyone can remortgage, so those who can have the option to. But they also need to work out whether it's worth all the hassle as well. At the moment, it's only got up to from 0.25% to 0.5%. But as we go forward, there's no guarantee it will stay the same. So some are looking for a fixed rate alternative for a period that can be up to 10 years, but everything comes to an end in the end. So let's just have a look through these few pointers that might help. They may make up your mind. Who knows? But let's just analyse it a little bit, go over some of the facts, and let's see if we can get some good advice out here, and we shall do that immediately. Number one, keep your powder dry. Bear in mind, this is the very, very early days of the interest base rates. Fears only really heightened in June when the Bank of England's Monetary Policy Committee first met to discuss this matter. The ones who wanted to push it through then were outvoted. When that didn't happen the second time around, obviously in November, but this is very early. The banks are really only devising their policies of how they are going to handle this really, but bear in mind, they are still all in competition with each other. So there will be good deals, maybe not so coming up to Christmas now. It's typically a quiet time of the year for the property markets anyway, but come the new year when things really start to gather pace again, you can see there'll be some good deals out there, which is great news for first time buyers, people getting on the property ladder, and those people who who can remortgage, who have that option to do so, they might be able to take advantage of that as well. So maybe it's worth just hanging on for a few months. You should give yourself 2 to 3 months research anyway. So if I was you, hang on and just wait and see. And you know, patience should pay off in the end. Number two, don't rush into anything when you find something. Even if you find what you consider to be a fantastic deal, do not just sign on a dotted line there and then. Go over all your mortgage terms and the rest of it, and make sure number one, you can actually do this, and number two, it's as good as it sounds. Go through all the fine small print and just make sure this is the right deal for you. You can get an offer with an expiry date and stuff like that, and that gives you a time frame then of you can say yay or nay right up until the date that the offer expires, and just give yourself that little bit of time just to make sure everything is as it should be. Who knows, you might change your mind, but certainly don't get caught short. Give yourself all the time you possibly can. Number three, check your credit score is up to scratch. I remember when I first had a credit score many years ago, Experian, I think I must have paid £20–30 for the privilege then. Not the case these days. Experian, they've been around, it feels like they've been around forever, and you can get your credit score from them free of charge, and it's something the banks will check up on. So if there was a bill you forgot to pay somewhere down the line and there's a black mark against you for that, it's good to know before you go through the costly process of an application. So do check your credit score and make sure that is good, and then you've got a better chance, obviously, of course, of getting a mortgage or remortgage or whatever it is you're looking for. Number four, do your sums and check your terms. Check the small print of that mortgage. Make sure you do that. Your mortgage may have a repayment charge for the initial incentive period that you signed up for. If you try and get out of your mortgage before then, which is the big thing about remortgaging, you will incur a charge. It could be into the thousands of pounds. If that period is passed, fine, you can remortgage as many times as you want, but do make sure that the incentive period has passed, and if the incentive period is maybe upcoming or a month or two down the line, or maybe 3–4 months down the line, start doing your shopping around now, and you of course can set a remortgage up for the day after that incentive period has passed. Number five, how much is your property actually worth? There's the loan to value ratio for a start, where you need, if you use the simple sums, they're over on the website with the top tips that we're talking about right now. The simple sums will say how much percentage of your home you currently earn at this term of your mortgage, but you also need to measure that against how much your property is actually worth. Don't just pluck a number out the sky. Let's not play the guessing game. Get a valuation. You can come down to us here at Manders Real Estate. and speak to us or give us a call, email, whatever you want to do, and we'll come down and do a valuation with you. And who knows, we're very good negotiators. We might be able to convince you to sell your home and move on to something else. We've got some great stock here and we're always looking for property. So do give us a call and we'll see what we can do, me and you. Okay, and that's Craig Birch, and we'll see you again next week. More top tips. I'll see you next time.